Well, good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for the fourth day of February. And what a Wednesday it was heading into the Super Bowl. Tweet heard around the world. The president did mention that he'd had another good meeting with Chairman Xi, and that's all it took. And there's some discrepancies and there's some arguments about exactly what he's talking about. If they were promised to take 12 million, are they going to take 20 million? Are they going to take 20 million on top of the 20 million that they always take? It's kind of up for grabs. But at the end of the day, the market liked it. We saw new crop soybeans, and at this point, that's what we're looking at. New crop soybeans up 8.25 cents at 1087 and a half. It did hit a cash sale target that we've had on the books for about I don't know, 2 or 3 months now. We did reward this area once before back in November when we spiked up. A lot of people obviously didn't participate because most people don't want to do any cash forward sales, in November or at the end of the year for the next year. But it was an opportunity. We did get a second chance here. Are we going to go back to 1130 and the high? I don't know. I hope so. Am I calling a top? No, I'm not. Am I suspicious that this is going to fizzle away like the last one? Yes, I am. Why? Because we have a gigantic crop coming up in South America. The Chinese would basically have to overpay for our beans. I don't know why they would do that, especially with the current geopolitical situation between us. So, am I happy? Yeah. Is it a great deal? Yeah. Was it a surprise? Yeah. Did we try to take advantage of it? Absolutely. And who am I to say that we can't go higher? I'm not saying that. I want us to go higher, but I want producers to not be the situation where we did this before. We went to 1130 and then we dipped down to 1055 and everybody's like, oh, I didn't sell anything above $11. Nobody knows where the highs are. Anybody that tells you where they think that they can promise you where the highs are, they belong in a mental institution. Okay. I've been doing this for a long, long time. What you want to try and do is manage your position. And your position, if you're a farmer or producer, if you're growing 100,000 bushels of soybeans, if you can pick up $1 on them, you want to do something to protect that $100,000. That's really what it comes down to. You can always re-own bushels after you sold them. If you think that we're going to have a 1988 type drought, burn up, we're going to go back to $18 beans, great. But we can't predict that, and that would be, I think, irresponsible for somebody to say that that's going to happen. So all we try to do is manage risk. We try to make good cash sales, and we try to hedge when we cannot make the cash sale. So you have another opportunity here to do some hedging. I'm a bit suspect because we've seen this before. And also, it's usually 2 or 3 days later when we dig into the actual numbers. It's, well, that's not what we meant. We were talking about this or that. So we have to wait for the smoke to clear. Certainly, it's a good thing. Anything that makes us spike up higher, it's great. I think you saw what happened with old crop beans. You get a bigger move there, up 26 and a half. Why is that? Look, that's where all the speculators are, right? Now let's leave it at that. The funds were already long about 17,000 contracts of beans, which is not a lot. I don't know if they bought more today or not, but somebody sure got paid today. I'll just leave it at that. So we went from 1060 to 1115, then we settled at 1092. So we only settled 30 cents off the low. The way these beans move, that can come or go very, very quickly. I know. How do I know? Because I stood the bean pit for a long, long time and stood there and took the other side of these orders when I was trading in the pits. So I know how you can be a hero one day and then a goat the next. March corn, that's the other odd thing too. In the corn and the wheat, they could not care less about a 25-cent rally in the beans. That to me is really negative, right? You have these corn at 457 and a quarter, up a half cent. You got March corn stuff in the bin. It went up a penny on the day, on a day where beans go up 27. And good Lord, you've got wheat lower on the day, down 2 cents in March. Chicago at 526 and three quarters. Kansas City right there with it at 530, down 4.5 cents. So I will just say this. Bottom line, it was a gift to soybean producers. I hope you took advantage of it. If you're not getting my letter, if you want to know the specific levels that I'm putting out there, and then you can go back and double check, because I send a letter out every day. It doesn't disappear once it goes in your mailbox. So you can Monday morning quarterback. You can bench race me. You can say, what if this guy say and what happened there. Um, so that's one of the benefits. So if you're looking for information, if you're looking for what I consider to be neutral, I'm not bearish or bullish. What I try and do is help guys make better cash sales. I work with people that are end users and they want prices to go lower. I also work with people that are obviously farmers and producers and they never want to sell because they always think it's going to go higher. So I help you manage your risk as best I can. That's what I bring to the table. In the livestock market, new highs there as well. That looks like they really want to go after those old highs there, the contracts. I know the guys are down there in at the Cattlemen's Associated meeting right now. They got to be happier than get all because back in November we were $75 lower and the fat cattle were $33 lower. So if you're at that convention and you're not happy, I think you should re-examine your the value of your cattle because it's a great move in the value of cattle. It's if you learned nothing last time when we broke, $75 in 6 days, and the way that we sold off in the fat cattle in about 6 or 7 days. If you swore that would never happen again, guess what? This is where you want to be setting some hedges. And the nice thing is, if you set a hedge with a put, you keep the upside open. But then when it collapses, you've got your floor. If you set your hedge with a future, imagine if you had sold futures to protect March feeders when we were down at sub $3. I mean, look at all the money you left on the table if you were short the board at $3. It's trading $3.70. So yeah, guys that I work with had 5 or 6 cents into puts. Did they lose the value of their puts? Yeah, but they also never made a margin call, and they're participating fully in the cash market rally. Now, yeah, when it does correct, you're not going to be 1-to-1. That's the rub on options, but you can't have your cake and eat it too. Now, I will say this, and I'll leave it at that. If you've got an option on, and if you do want to turn it into futures, you can. So there's always that possibility there. But I think for 99% of the producers out there, you'd be better off using options, especially in a market like this where we're going up and down $70 in the matter of months. And in the lean hogs, the deferred months were lower. April did finish higher. It looks like April wants to go get that $100 print. Again, that's another great opportunity because we've been through this before in the hogs. Back in September, we went from 94 down to 81. So now we've gone from 81 to almost 100. So almost $20 gain. That's a tremendous amount of revenue for a lot of hog farmers. Set a hedge. If you're making cash sales and you think you're selling it too cheap, you're selling into a tremendous rally. Use some of that money and buy cheap calls after you sell those animals. Then you can stay with it on the long side on paper. People always say that hedging is just about defense. I'm all for it. If you sell something here and you want to re-own it, especially with animals, you sell 2 potloads or 3 potloads, re-own one of them. It may be the best hedge you can make. So yes, you can hedge after a sale as well. The U.S. dollar a little bit higher. Stock market kind of all over the place. Got some people out there watching the silver market, another $10 range there in silver market. If you're trading silver, be careful. That's all I can tell you. It's moving $3, $4, $5 at a crack. Even if you have the micro on, that's $4,000 or $5,000 swing. If you're trading the mini, that's times 2.5. And if you're trading the big one, that's $5,000 a penny. That gets pretty expensive when we're moving 10 cents up or down. So again, I'm Chris Robinson, Robinson Ag Marketing. Take a look at my site. If you're looking for help, give me a call. If you want to talk about hedging, if you want to learn more about hedging, sign up for my letter. If you like it, keep it. If you don't, delete it. All right, this is Chris. Have a great day. Take care.